can't remember what the questions were. Let's take a look and see what our responses are. Let's see if I remember how to do this. Wait, bad, morning, horrible, power, frigid. Okay, hold on a second. These may have been from last semester. So when you went in, to this here, should have seen something like this with your name. Did you all see that when you went in there? Yeah? Okay. Were you able to get through all of the questions?
Yes.
Okay. All right. So let's take a look at our answers. One is underway though. So let's see our responses. All right, favorite day of the week? Friday with a big win? Because favorite, okay, so a clue about this, you have to, if you're gonna do separate words, you gotta put like an underscore between them, and I didn't tell you that, but otherwise it puts everything, so chest doesn't quite fit in there, but it must be part of some other sentence.
He's saying like chest day isn't like a workout day.
Oh, it's a chest day. There you go. Chest day is a favorite day. Friday with the big win. Saturday, Thursday's big up there. How come Thursday?
It was pretty medium. I didn't want to put like Friday like everyone else.
Yeah. Who put Thursday? Is Thursday in anticipation of Friday?
Yeah.
All right, favorite TV show. So we got Game of Thrones, The Office. A lot of people in here like to watch The Office. All right, Grey's Anatomy. You know what's funny is I don't think either one of those shows is in production now. Are they? They're all reruns? They're all Netflix?
Grey's Anatomy, they're like debating on coming out with like season 20, but they're on the fence about it.
Oh, is that still on, Grey's
Kind of,
Anatomy?
but like once you get up to the seasons, it's just so convoluted and messy.
Gotcha. Oh, I see. Okay, so Peaky must be there. Peaky Blinders. Who said Peaky Blinders? I love Peaky Blinders too. Is that other people seeing Peaky Blinders? It's a good show. Make sure your kids are not in the room when you're watching Peaky Blinders, though. Let's see. Star Trek.
Yeah.
Again, some of these are all mixed up, so I'm trying to figure out. Criminal Minds. Bob's Burgers. See that in there? All right, so obviously most, the larger the word, the more people said it. So a lot of people in here like The Office. How do you clear your snow? I'm sorry to start talking about snow so soon, but before you know it. All right, so most people just shovel it themselves, or a snowblower, or they don't have to shovel. Yeah, we did. I've got 2 boys, and they should be able to shovel, but motivating them to go out and do it is a whole other issue. Favorite movies. Okay, so Lord of the Rings. Obviously, I see Bond. Is that maybe James Bond?
Yeah. Diamonds are forever. I should
Diamonds.
have known about the.
Yeah, no, that's all right. Venom, Minions, The Notebook. Oh, somebody's into romantic movies. Planet. The Conjuring. Who said The Conjuring? You like The Conjuring? It's a good. Have you watched all of them? Yeah. The first one, of course, is the best one. But yeah, you know that's a real house, right? Favorite season, fall. Okay, so you all should be happy coming up. Here, it's almost fall. Yay. Favorite thing to do on a lazy Sunday with no homework? Going to bed, friends, movies, video games, something with the dog. Play with the dog, I assume. Hang with the dog. Xbox. Run. So somebody's a runner and a walker. Those all sound like great activities. All right, thank you very much for participating in that. Okay, so I have added, get out of here, so we've got our module 1. I'm still not used to Canvas. It'll probably take at least the whole semester. I have added another, actually I put it under the intro. I need to move that to module 1. This in-class activities page. So on here, what I will do right before every class is I'll post an agenda, what we're gonna go over during class, so you can see roughly what we're gonna be discussing and all of that during class time. So for example, attendance, review our schedule at a glance, and the icebreaker that I just did until 11:25. We'll look real quick at the schedule here in just a second. I've got a video for you to watch as well. It's just kind of a short 5-minute video where they follow along what a payroll department does. Okay, so we'll watch that. And then we've got some PowerPoint slides to start going through. And I know that's awfully small. Let me see. Make that bigger. There we go. Where we're going to start talking about different laws, tax laws, and what we call fair labor laws or fair employment laws. Got another short video for us to watch together that just kind of gives a summary of several of those laws, as well as some additional laws that your book doesn't really go into, but things that it's good to know about. We're going to do a little bit more, we've got some more slides to go through some of those fair employment laws, and then I've got a little activity for you to do at the end of the day. Okay, so real quick, let's take a look at our schedule at a glance so you can see where we stand right now and where we're going. Okay, so today is the 29th. We're digging into chapter 1. Thursday we'll continue with chapter 1. Thursday this week you have your first assignments due. Those were just your intro assignments. So involving some Cengage introductory problems, discussion board post, and then there's that extra credit quiz as well. Tuesday we'll wrap up with chapter 1. Next Wednesday, if you're not feeling it with this class, your last day for a refund is that Wednesday. After that, you can still drop the class, but you don't get a refund. And then we'll go and get into chapter 2, starting next Thursday. Okay, so that's what we're gonna do today. So let's get this video going. Hopefully I can maximize it.
Our job here in payroll is to pay all Adams County employees. It's a very daunting task. It really is our job to be the last person to check your paycheck to make sure everything's accurate.
Some months are more difficult than others, depending on what kind of projects we have going on, whether it's the audit time, W-2 time. Those months are pretty challenging.
W-4s, direct deposits, just their new hire information and general's input. Then we'll have the retros throughout the month, the termination paperwork to pay attention to. Each day is something different.
We have to make sure that you're taxed properly. We have garnishments, levies, child supports that come out. And I think a lot of people do have the misconception that, you know, we only have a monthly payroll, so what do we do the rest of the month? And they don't realize that we have a ton of things to do all month long. We have about 1,900 employees, and last year we paid about $113 million in gross wages and about $30 million in taxes. So our number one goal is the accuracy of the paychecks, because money is very personal to everyone, and so it's very important to us to get everyone paid accurately.
I feel like we make a huge impact on the employees just because of the fact that they are working to pay their bills and to have fun in life. So I feel like if we don't do our job well and accurately, that will impact them. People's money is important to them, and I want to make sure that we pay them correctly. When we have a quiet payday, that's when it's probably the most rewarding, because then we know that there's no questions on the checks. It's not just the push of a button to push a check through the system. It takes a lot of work in prepping and processing. It's not just cut me a check and it's done. It's a process.
Process of it, I guess, is giving yourself enough time to do those checks and rechecks and triple checks and everything, just to be sure we have it correct when we do hit that button.
In payroll, there really is no room for error. It's a lot of people and a lot of little details to check in such a small window. And during payroll week, we want our focus to be that we're getting all those checks and things looked at before you get your check.
We catch a lot of the little things to have that human eye looking at it. It catches any errors that technology may not.
And when you have something that just clicks and just works and everything kind of flows through how it's supposed to, it's the most amazing feeling, because if you're off, goodness, by 2 pennies, those 2 pennies can give you a headache for an hour, 2 hours, 3 hours, even a day sometimes. So when things work, it makes life a lot easier.
If you like numbers, it's a lot about the numbers, but what's different for us is it's a lot about the people and the employees, and it's about helping them, and that's what makes us a little bit different. It really takes all of us to get it all done. Everyone is on the same page as far as the importance of getting the payroll out.
It's been extremely nice coming to work with a team like that.
The most rewarding is the connections that we have, because that's what it's all about at the end of the day.
When you get those people that say thanks for paying me, that always makes it more fun, a little bit more rewarding.
So just kind of a little snapshot of one particular payroll department. Obviously this is a, looks like it's a city or some type of municipality, so that's why they've got the very large payroll. They mentioned like 13 million, something like that. So one thing I just wanted to point out that they also mentioned in the video is the fact that, you know, a lot of people, all they see is that paycheck, and they think it's just one, you know, one step in the process, and obviously it's not. It's multiple steps. There's lots of things that go on in the background, and that's why you're here, is to learn about all of those things that go on in the background in order to process that payroll. So with that said, any questions after statements, comments? Oh, okay. Let's go to our PowerPoint slides here. And sorry, back to our agenda here. Kind of on schedule. All right, so we already went through this code of ethics on last Thursday. We reviewed that, and there's more information on that, or it's listed as well in your textbook. Remember that code of ethics is put together by the American Payroll Association. These are all, none of them are rules per se or laws, but they are ethical guidelines for payroll professionals to adhere to. So, essentially this is our textbook. These topics are the topics that are going to be covered in the textbook that we are using. The chapter 1 is an overview of everything. Chapter 2, we're going to go through this Fair Labor Standards Act. This is a big, big law. It's huge. It is administered by the U.S. Department of Labor. These are all federal laws, by the way. So they're not state laws. There are additional state laws as well that have to be followed. But these are all federal. The Fair Labor Standards Act it's so important it gets its own chapter. So the Fair Labor Standards Act is the act that sets the federal minimum wage and overtime rules. Those are the two. It does a couple of other things too. It also regulates child labor in the U.S. and has some record-keeping requirements, but its two main functions is to administer minimum wage laws, the minimum wage law in the U.S., and to ensure that overtime rules are being abided by. So the Fair Labor Standards Act, like I said, it is administered by the Department of Labor. The U.S. Department of Labor has jurisdiction to enforce this particular law. And we're going to be spending quite a bit of time on the different provisions of that law. You'll find out when we get into this discussion why it's so important with regard to employment. At its core, it helps to determine whether somebody is an employee or not. And that's a big distinction. So that's one of the main things that it does. But those two facets are ones that we focus on a lot. Overtime, so this is going to involve some calculation of overtime, obviously, and minimum wage rules as well. The next one, so that's going to be chapter 2. That's where we get into the details of the Fair Labor Standards Act. And we start calculating gross paychecks. Gross versus net. Does everybody know the difference between gross and net? Hopefully you do. Gross is before any deductions. Net is after all deductions, right? Or if you're in financial accounting, gross would be the gross income, total income received. Net would be after all of those expenses. So we still have that concept in payroll as well, gross being the gross payroll, and then net being the actual amount that the employee receives. Now, anybody who's received a paycheck knows that those two numbers can be extremely different, right? After they've taken out all of the deductions, such as taxes and any other types of voluntary or involuntary deductions. We're going to go through all of that. The rest of these are tax laws that we're going to examine. First one, Federal Insurance Contributions Act, FICA. Anybody seen that on their paycheck? FICA? Yeah, that's Social Security and Medicare tax. Okay, so FICA, we're going to go into details about how that is calculated, how that is administered, how those amounts that are withheld from employee paychecks are then sent off to the government. And we'll go into a lot of detail. That is chapter 3. So for our midterm, we're covering this overview. We're covering the FLSA, and we're covering FICA. Okay, so those are, yeah, you had your hand up.
You said Social Security and what else? For
Medicare.
Medicare.
Mm-hmm. I can write that down for you too. So FICA consists of 2 taxes, Social Security and Medicare. Those are the 2 taxes. And it stands for Federal Insurance Contributions Act. When we get into that chapter, you'll become very familiar with that terminology. And you will notice, well, if you're just beginning your accounting career, it's now is as good a time as any to get used to acronyms. There are a lot of acronyms that are used, especially in tax. So that's why you see this FICA, FLSA, and you'll hear me saying those acronyms frequently. If I say an acronym and you don't know what it is, please stop me and ask, because I'll tend to just use them without remembering that, you know, it's new terminology to students. So that is chapter 3. Then after our midterm, we're going to get into income tax. So this is the income tax withholding that occurs at the paycheck level. So again, if you've received a paycheck and you are subject to income tax withholding, you will be familiar with it. You'll see it on your paycheck as a deduction. It's the amount that is taken out at the source, meaning at the time that the employee gets paid, an amount is withheld. Now, we don't just hold a flat amount. The amount that gets withheld is dependent upon many circumstances of the employee themselves. So things like, are they married or not? How much money do they make? How frequently are they paid? There are lots of different factors that go into that calculation of income tax withholding, and we're going to go through a lot of calculations on that. That's chapter 4. Okay, so that'll be after the midterm, but it'll be part of the final. So federal, state, we will also look at Iowa income tax withholding. Now, just a kind of a little preview, Iowa income taxes are actually changing. They're in the middle of changing right now. We are moving from what's called a progressive tax system in Iowa to a flat tax. So progressive means that the more income you make, the higher your tax rate is. The more you make, the more they take, essentially. And that's how our federal income tax system works as well. That's not changing. The federal tax system is not changing, but Iowa has currently a progressive tax system, but we're moving to a flat tax where everybody is going to pay the same tax rate on all of their income. Much more simplified. There are political arguments on both sides as to whether that's fair or not. We're not going to really get into that part, but we're going to look at how Iowa currently calculates that income tax withholding at the employee level. Local taxes. Lucky for us, we live in Iowa, we don't have local income taxes. We have other types of local taxes. We have sales taxes, we have property taxes, there are certain excise taxes on different types of products, but we don't have any local income taxes. Now that is not true in other states. There are other states where there are local income taxes. So for example, Ohio has all types of local income taxes. They have city income taxes. They have county income taxes. They have school district income taxes. So when you get your paycheck, you've got all these different levels of taxes that have been withheld. And if you are a payroll accountant in Ohio, you gotta know a lot of stuff, right down to the city level. But in Iowa, luckily, we don't have that, but we will examine that a little bit when we get to that chapter. Chapter 5, we get into unemployment taxes. A lot of people aren't familiar with unemployment taxes. A lot of the public aren't really familiar with unemployment taxes. They may be familiar with receiving unemployment benefits, but not so familiar with how those funds are collected in order to pay those unemployment benefits, because it's only the employer that pays those taxes. The employee themselves they don't pay those taxes. Employees are familiar with Social Security, Medicare tax. They're familiar with income taxes being withheld, but they're not as familiar with these unemployment taxes being paid. Because like I said, that's only paid by the employer. We have both federal and state unemployment taxes that are paid, and we're gonna look at both systems here. The last chapter that we examine, we've gone through all of the laws. We then work on focusing on how the payroll system integrates with the greater accounting system, because payroll is such a large part of a large expense. For most companies, it's their largest expense. Accurately reporting that payroll is extremely important, accurately reporting that in the financial records. So we're gonna look at the journal entries. So if you're taking principles now, by the time we get to that chapter, you'll already be familiar with a lot of those journal entries. And, or if you're taking the, I don't know if the intro to bookkeeping class covers that or not. That's a new class this semester. But what I found is for a lot of students, we get to that chapter and like, oh yeah, wait, we just did that. So it sort of helps to reinforce that knowledge for you. Okay, so those are all of these types of laws affect payroll. This is essentially the format of our class going forward as well. Questions? All right, so let me refer back to my schedule here as well. Okay, so what I want to do now in your module, let's see here. We're gonna talk about some other laws as well. These other called fair employment laws. We're gonna look at those, but before we do that, I want to point you in Canvas to some additional articles and links. Okay, so I had mentioned that the U.S. Department of Labor is the department that oversees and enforces that FLSA, Fair Labor Standards Act. So a great place for you to get to further your understanding of the FLSA and what the Department of Labor does is their website. They have a lot of information here about exactly what their duties are and what it is that they cover. So you can see there are all sorts of topics that are listed here. Wages and hours. That's that minimum wage and overtime. They put that up top because that's about the most important thing that they do. I mean, it's all important, but that's a big one. They also help to enforce some workplace and safety. Workplace safety and health. They help with workers' compensation, employee benefits. So a lot of these are also attached to different laws that we're going to look at. So they have a big job to do, the Department of Labor, in regulating all of these different items. I'm not going to go through all of those, but you'll see several of them are familiar when we go through the slides. So like the Uniform Services Employment Reemployment Act. What else here? Workers' Compensation, Family Medical Leave Act. I always have students that are familiar with that Family Medical Leave Act. A lot of employees take advantage of that particular act, and lots of other responsibilities. So this is a great place to take a look to kind of enhance your understanding. Discrimination in hiring and harassment laws. So this is a good place. This NOLO is a great place to get more information as well about, and they've got some state-specific information. I don't see Iowa listed here, but some different questions. Okay, can I be fired because I'm overweight? Our new policy, let's take a look at this, what they say. So, I do administrative work for a fitness magazine. There have been some changes in management recently, and the company recently announced some new policies. One policy is that all employees must be within normal limits when it comes to body mass index. Because our magazine is focused on fitness, management wants us all to reflect a certain image. I work out, eat relatively healthy, but I've always been a bigger person. I'm worried that I could get fired for being overweight. Is this legal? And then they go through and talk about what the ramifications are for that. So federal anti-discrimination laws protect employees from being fired based on certain characteristics, such as race, gender, age, religion, or disability. However, weight is not a protected characteristic. So they mention that here. But this, just as an example of some of the different questions that might be covered here, kind of an interesting website to peruse as well. These all have to do with fair employment. Okay. So this is also NOLO on employment law. So just some different questions and answers as well. Are you entitled to paid vacation days? By the way, the answer to that is no. There's no federal law that guarantees any paid vacation, sick time, anything like that. That's at the employer's discretion, although there may be state laws, depending upon the state that the employer does business in. But just to kind of give you an idea there. Paycheck City. So when we start getting into doing some paycheck calculations, and this is kind of a fun site as well, just to do yourself, like see what you know. I would use this site to test out different withholding amounts on my W-4 form, or for employees to do that as well, to see what the net paycheck is going to be. So this has some salary calculators attached to it. So there's an hourly calculator and a salary. Select a state, so let's just say Iowa. Check amount. Oh, this is probably an hourly rate, so let's do $15 an hour. How many hours? 45. So gross pay. Now if there was an overtime rate, we would want to add that in there. And then there's questions about, you know, federal taxes in order to calculate what the tax withholding is on that. So it's just kind of a calculator website that you can play around with. Now, you're going to have a lot of homework, especially in chapter 4, that involves doing calculations on paychecks. Keep in mind, our textbook is it's using laws from 2022. It says 2023 on it. It is the 2023 edition, but because tax laws are always 1 year behind, it's using 2022. So don't use this to do your homework. Okay, you are actually going to have to do the calculations, because this has whatever the most up-to-date calculation is. Okay, but this is just to kind of show you and to play around with a little bit there. History of U.S. taxes. I know you're all interested in history and you're all interested in taxes, and here we've got the combination of the two. How did U.S. taxes come to be? These are income taxes, by the way. Gives you a little bit of history. I'm not going to go through all of that, but just to show you. That is 16th Amendment to the U.S. Constitution. I don't know if you are aware. You've heard people say, has anybody heard people say taxes are unconstitutional? Has anybody ever heard that argument? There are people that say that. Yeah, it's nowhere in the Constitution. The federal government does not have the right to tax. It's nowhere in the Constitution. It actually is. It's the 16th Amendment to the Constitution. So the 16th Amendment here says, let's see if we can get the exact wording here. Oh, are you gonna let me see it? No? And I can't read it, it's too small. Shall leave power, let's see, the Congress shall have power to lay and collect taxes on incomes from whatever source derived, without apportionment among the several states and without regard to any census or enumeration. That's what that says. Pretty clear. Congress has the right to do that. So there's your text of the 16th Amendment to the Constitution. Give you a little history lesson there. And then also, and that's just taxes. When we first started, when the U.S. first amended the Constitution to allow for the collection of taxes and had the first tax laws, there wasn't any income tax withholding. So what happens when everybody waits until the end of the year to pay their taxes? Do you think you could wait until the end of the year to pay your taxes? Say you owed $8,000 in taxes. It's awfully nice that they collect a little bit every paycheck, right? Because then you don't have to come up with that big chunk at the end of the year. That wasn't always the case. It wasn't until World War II that we started instituting income tax withholding at the source. So a little bit of history there as well about income tax withholding in the U.S. Okay, All right, almost there. Okay, so we're gonna look at, like I said, those laws that we looked at before, the FICA and income tax laws and unemployment tax laws. Those are all tax laws, and they have to do with the regulations around collecting all of those amounts. There are lots of laws associated mostly with the human resources function, but also somewhat with payroll, that don't have to do with collection of taxes, collection and calculation of taxes, but they do have to do with the fair treatment of employees, called fair employment laws. So there is a difference between those two. We've got those fair labor laws, which we're going to look at here in our PowerPoint slides. You can see all those acronyms there. We're going to look through those. And then we've got the tax laws. We need to get an overview of those fair labor laws, but they really are mostly a human resources, they fall under the human resources umbrella. Okay, but we are gonna take a peek at them. Our focus is mainly going to be those tax laws. I have another video here though for you to watch. Before we look at this, are there any questions? So this video is going to go through some of those employment laws. Now the video mentions some laws that your textbook doesn't really talk about very much, but most of the laws that it covers are also covered in your textbook. But this is just to kind of give you a little bit of to mix it up a little bit, so you're not just reading about them.
HR Basics is a series of short lessons designed to highlight what you need to know about a particular human resource management topic. In today's HR Basics, we explore employment law, providing an overview of the laws and regulations pertaining to the management of people in organizations. Employment regulations derive from laws passed by Congress, state legislatures, and local governing bodies. They also originate from executive orders of the President of the United States to manage the operation of federal government and its contractors. These regulations commonly focus on fair treatment of people in the workplace. Employment laws influence employee contributions to organizational performance by guiding managers in the management of people in organizations. Nearly all employment laws can be categorized in 4 areas of the regulatory environment. Here they are: equal employment, total rewards, employee safety and health, and labor relations. To begin, let's focus on regulations in the form of equal employment opportunity, or EEO laws, and other regulations related to fair treatment of employees. Equal employment opportunity laws prohibit specific types of job discrimination in the workplace. EEO laws and executive orders are intended to eliminate employment discrimination. The EEOC oversees compliance of these laws. 2 agencies oversee equal employment regulations. As we mentioned, the Equal Employment Opportunity Commission, or EEOC, is responsible for developing guidelines and overseeing compliance with most anti-discrimination laws. Then, the Office of Federal Contract Compliance Programs, or OFCCP, is responsible for the same activities relative to executive orders and work in the federal government. The primary objective of anti-discrimination legislation is to ensure that individuals are given an equal opportunity in the workplace. Title VII of the Civil Rights Act outlaws employment discrimination on the basis of race, color, national origin, sex, and religion in any aspect of employment, from being hired to being fired, and everything in between. These traits are called protected characteristics and are referred to as protected classes. Discriminatory practices can typically be grouped in one of 4 categories. First, disparate treatment, where an individual is treated differently because of the characteristic that defines their protected class. Second, disparate impact, a more subtle and usually unintentional form of discrimination that's also known as adverse impact. Third, harassment, which is unwanted and unwelcome treatment because of a protected class. And finally, retaliation. The law prohibits employers from retaliating against an employee for making a complaint of harassment or discrimination. Now let's move on to those laws that regulate compensation and benefits. Over the course of time, the administration of employee compensation, or total rewards, has been regulated by federal, state, and local governments. Let's take a brief look at the primary compensation and benefits employment regulations that you need to know as a human resource professional. Since 1931, 5 major pieces of legislation have shaped the fabric of how employees are paid, including, in 1931, the Davis-Bacon Act, in 1936, the Walsh-Hartley Act, in 1938, the Fair Labor Standards Act, in 1963, the Equal Pay Act, and in 2009, the Lilly-Ledbetter Fair Pay Act. The Fair Labor Standards Act, or FLSA, is administered by the Wage and Hour Division of the Department of Labor. The Act establishes standards for minimum wage, overtime pay, record keeping, and child labor. These standards affect more than 130 million workers, both full-time and part-time, in the private and public sectors. To learn more, see Greg's Part 541, Fair Labor Standards Act. I'll put a link to that video below. Equal pay laws provide that no employer discriminate between employees on the basis of sex by paying wages to employees at a rate less than that of the opposite sex. Although the Equal Pay Act was passed more than 50 years ago, a gender pay gap still exists. Females earn on average only 77 cents for every dollar males are earning. Workplace safety law consists of federal and state regulations imposed on businesses in an effort to keep employees safe from harm. These rules apply to nearly all employers. Standards are in place to reduce the risk of accidents and illnesses in the workplace, and government agents have the authority to investigate violations and issue citations for noncompliance. Offenders are subject to monetary fines and, in some cases, imprisonment and other criminal penalties. The Occupational Safety and Health Administration, or OSHA, is the federal agency responsible for protecting the health and safety of workers. OSHA makes sure that employers follow occupational safety and health regulations and keep the workplace safe. For more about OSHA, see Greg Learning's HR Basics, Occupational Safety and Health Administration. I'll post a link to that video below. Workers' compensation law is a system of rules in every state designed to pay the expenses of employees who are harmed while performing job-related duties. Employees can recover lost wages, medical expenses, disability payments, and the costs associated with rehabilitation and retraining. The system is administered by the state and financed by mandatory employer contributions. States have enacted workers' compensation laws to replace traditional personal injury litigation to remove risk for both the employee and the employer. Laws regarding labor relations help maintain relationships with employees organized by labor unions, including the establishment, negotiation, and administration of collective bargaining agreements. 3 acts passed over a period of almost 25 years constitute the foundation of United States labor law: the Wagner Act, the Taft-Hartley Act, and the Landrum-Griffin Act. These acts are also known as the National Labor Relations Act, the Labor Management Relations Act, and the Labor Management Reporting and Disclosure Act. Each act was passed to focus on some facet of the relationship between unions and management. Jointly, they're referred to as the National Labor Code. For more detailed information on this National Labor Code, check out Greg's Learning's HR Basics Labor Relations. I'll post a link to that video below. Understanding employment law is critical for both employers and employees. Our 4 categories of employment law, equal employment, total rewards, employee safety and health, and labor relations, help frame our understanding. Employees should know their rights so they're not treated unfairly, and employers should understand employment law to avoid legal action resulting from ignorance or a lack of knowledge.
So just a little background on some of those laws. Oops, get out of there. All right, let's go back to our slides here. Let's talk in a little bit more detail about some of these laws. So the FLSA, like I said, that's something that you're going to learn a lot more about in Chapter 2. So it was passed in 1938. What was happening in 1938? Depression. Right. The Great Depression was happening. We were starting to get kind of toward the end of it, but during the Great Depression, we had about 25% unemployment. We had a lot of homelessness. We had a lot of people a lot of children as well that were living in poverty, and we changed a lot of the ways that we did things in this country. We decided there really was no social safety net before this time period. We instituted a lot of laws that brought about a social safety net. The FLSA could be seen as something like a social safety net, but it protected those who were employed. It provided a minimum wage. Now, obviously, the minimum wage was not $7.25 an hour back in 1938. I don't know what it was, but it was something much lower than that. And it brought about changes to overtime regulations. Actually, there were no overtime regulations before. You could work any number of hours, and your employer might or might not have to really pay you for that time. Now, there also, right now, is no limit on how much your employer can require you to work. There are 168 hours in the week. Your employer could require you to work 168 hours. However, if you work over 40 hours a week and you're an hourly employee, they have to pay you for that time over 40 hours a week. Now, chances are they're not going to keep any employees. In most employment situations, they're not going to keep very many if they're making them work 168 hours a week. However, that overtime provision is a requirement now because as a result of the Fair Labor Standards Act. Currently, the minimum wage is $7.25 an hour. That has not changed since 2009, something along those lines. Somebody can look that up if they want. I don't know off the top of my head. So that is not indexed to inflation. It does not increase automatically with inflation. It takes an act of Congress to raise that minimum wage level. So that's why it's very difficult to get Congress to act really pretty much on anything, but especially on that minimum wage. Now, that is a federal minimum wage. There are states that have different minimum wages, different minimum wage amounts. So if the state minimum wage is more generous than the federal minimum wage, then whatever the wage is in that state is the prevailing minimum wage. So for example, I think Missouri is, I don't know, $11, $12 an hour, something along those lines. I think every state around Iowa has a higher minimum wage. Iowa does not, though. Iowa's minimum wage is $7.25 an hour. But those other states, if that minimum wage is higher, that is going to be the minimum wage in that state. Whatever is most generous to the employee is the regulation. Fair Labor Standards Act has equal pay for equal work provisions within it, but it did take a later act, that Lilly Ledbetter Act of 2009, to really bring that, to add some teeth to that provision. So the Fair Labor Standards Act, and we'll go in more detail of this, it actually doesn't cover every employee or every employer. There are certain minimum requirements that the employer or the employee have to meet in order to be covered by the protections of that act, and they are related to interstate commerce, so any type of commerce that passes over state lines. Now that's pretty easy to do these days. If you send an email to somebody in Illinois, or you take an order, pick up the phone and take an order from somebody in Omaha, you've just engaged in interstate commerce. Okay, so it's pretty easy to meet that provision. There are also some restrictions with regard to how much production of goods and services for interstate commerce. Like I said, Chapter 2, we're going to get more into those details. And it establishes that minimum wage. Yeah.
So would it be like contractors and stuff that this doesn't apply to, or? Contractors
are not considered employees.
Okay.
Right. So only employees would be covered under the FLSA and have those protections. If you are a contractor, and we're going to get more into that in Chapter 2 as well, that distinction between an employee and a contractor, contractors do not have the protection of these laws. Okay, and like I said, we'll talk more about that when we get to Chapter 2. But yes, good point. Okay, FICA, Federal Insurance Contributions Act. Again, This is known as, they call it OASDI up here, Old Age Survivors and Disability Insurance, otherwise known as Social Security. They don't call it, we're not listing it as Social Security because there are actually more provisions under OASDI than just Social Security. It not only, most of us know Social Security as retirement funding, right? Once you reach age 65 or 66 or 67, you can start to receive Social Security benefits if you've paid into the system. Well, it does actually more than that. If a parent with dependent children dies, it will provide survivor's benefits to those children and to the spouse if they don't remarry. So it provides that. There is a disability portion of social support under OASDI as well. So if you become disabled, you could be entitled to disability insurance through OASDI. Now my understanding is that's pretty difficult to obtain, but it is there and does exist. It also gives a very small benefit when an individual passes away. There's like a $255 benefit given to their survivors. Not sure what you can do with $255, but whatever. So OASDI, also known as, you'll hear me interchange that OASDI with Social Security. So if you hear that, so we've got FICA. Doesn't work very well. And it's got these two components. We've got OASDI, otherwise known as Social Security, SS, and we've got Medicare, which your textbook calls HI, health insurance. You'll see me use MC, Medicare, okay? The Medicare portion of that is health insurance. It's provided to individuals who are over age 65, also to those on disability who qualify for disability insurance through Social Security. This particular tax is paid equally by the employer and the employee. Again, Chapter 3, we're going to go through all the details of this. And it imposes a tax on the net earnings of both employees and individuals who are self-employed. So those contractors that were just mentioned, they do have to pay Social Security tax or FICA taxes, but they have to pay, whereas with the employer and if there's an employee, the employer and the employee each pay half. For a self-employed individual, they have to pay all of it, the whole amount, because they're essentially employee and employer at the same time, okay? This again was enacted in the 30s for the same reasons. Employee protections as a result of the Great Depression. All right, income tax. So federal income tax, again, it's levied on the earnings of employees. It's also, self-employed individuals also have to pay income tax, but again, they don't get paychecks. Self-employed individuals don't receive paychecks per se, like employees do, and so self-employed individuals pay that tax in a different manner. Employees, for our purposes working in payroll, we are concerned with employees because that's where we're going to withhold income taxes, FICA taxes, all that stuff on the wages of employees. So it's withheld from paychecks that are issued if it's an employee. There are a couple of different methods used to calculate that we will get into in Chapter 4. State and local income tax, again, it's going to be withheld from paychecks. It's going to differ from state to state. There are also some states that don't have income taxes at all. They don't institute an income tax. Texas, Vermont, Washington, Nevada, what are the other ones? South Dakota, Florida. Let's see here. States without income tax. I wouldn't be surprised if Iowa gets added to that list at some point. Alaska, Florida, Nevada, South Dakota, Tennessee, Texas, Washington, Wyoming. I guess Vermont's not on there. I thought Vermont didn't have one. New Hampshire only taxes interest and dividends. I confused the two. So New Hampshire does not tax wages. They only tax other types of income. Okay. Again, it's going to differ from state to state, and we're going to talk more about that in chapter 4. Federal unemployment taxes, otherwise known as FUTA. You'll hear me say FUTA and SUTA. FUTA, federal unemployment tax. SUTA, state unemployment tax. FUTA is an employer-only tax. Only the employer pays that tax. Now, it probably results in lower wages for employees, so indirectly employees are paying that tax, but the employer is the one that gets the bill for that. The federal unemployment taxes are used to pay for state and federal administrative expenses of the unemployment program. Federal unemployment tax and state unemployment tax work together. They work in conjunction with each other. They're cooperative programs. The FUTA portion of that tax pays for the administrative costs. The SUTA portion pays for the actual benefits to employees. Okay, we're going to talk about this credit later when we get to chapter 5. State unemployment taxes, again, where it says above FUTA, it's not used to pay the benefits. SUTA taxes are used to pay the benefits. And you'll see when we get into the calculations of these taxes that the tax rate and the amount of tax that's paid is significantly higher to SUTA than it is to FUTA. Okay, and the reason being that it's those benefits that are being paid from those SUTA taxes. Again, chapter 5. Okay, so those are the main laws that we are going to be covering in this class. Now, in addition, along with that video that we watched that introduced you to some other laws, we do need to mention certain fair employment laws because they do have significant impacts on employment. All right, Civil Rights Act of 1964. This is an important one. This one prohibited discrimination in hiring, firing, promoting, compensating based on these aspects: color, race, religion, national origin, or gender. So that question that we looked at for being terminated for obesity, that's not listed under there, although there have been updates to this that would include some disability, so that could be a factor in that scenario that we looked at. It also prohibited sexual harassment. It applies to all employers who engage in an industry affecting commerce, so anything where pretty much every industry affects commerce, and employs 15 or more workers in 20 or more weeks in the current or preceding calendar year. So you can see very small employers could be excluded from this, right? However, that affecting, well, actually, some very small employers could be excluded from the provisions of this particular act. Now, back in 1964, the law was passed and it instituted these restrictions on discrimination, but there were no penalties for acts of discrimination. So it's awfully difficult to enforce a law when there's no actual punishment for breaking that law. Right? It wasn't until 1991 that, where the Civil Rights Act of 1991 was passed, that allowed for individuals to sue when they were discriminated against. But before that time, there wasn't a whole lot of teeth to it, to this law. It allowed for, and that's where this came in, compensatory and punitive damages in cases where the discrimination is intentional. So not for unintentional, but for intentional. Compensatory means they're replacing lost income as a result, actual lost income. Punitive is we are going to punish the employer for their acts. Okay. Another law you need to look at, Age Discrimination and Employment Act. A lot of Students are very surprised by this act. What do you think the age limit is? At what age do you think discrimination might start?
40, 65.
60, 65? Yeah, Steve's right, it's 40. The limit, the ADEA addresses discrimination, the unlawful firing of individuals age 40 and above. Employers, employment agencies, and labor unions cannot use age to discriminate in hiring, firing, or promoting individuals. Again, applies to employers engaged in interstate commerce with 20 or more workers. So again, it's not going to apply to every single employer. 40 years old, sorry, this is kind of, let's see if this works. Nope, it's just a little, the formatting's a little weird on that. Provides protection to workers over 40 years old with some exceptions. One exception is executives 65 or older who have held high policy making positions during a 2-year period prior to retirement and are entitled to an annual retirement benefit of at least $44,000. Those employees can be forcibly retired. So you can force out executives as long as you meet those parameters. The employer needs to keep the records to make sure that they are within the guidelines of that particular act. Americans with Disabilities Act. This one actually has an Iowa connection. Most of you are too young to remember Tom Harkin, but he was a senator from Iowa. I know Chuck Grassley has served many years. Tom Harkin also served many years, just not quite as many's. But he was one of the co-authors of this particular act, Tom Harkin. So this was passed in 1990, prohibits employers with 15 or more employees, employment agencies, labor organization, or joint labor management committees from discriminating against qualified individuals. The individuals have to be qualified, who can perform essential functions of the job with or without reasonable accommodation. Qualified persons based on disability. So this is disability-based, this addresses disability-based discrimination as long as the individual is qualified and there really aren't any physical limitations of them working in that position. Now, do you have to hire a blind person to drive a bus? No. There are reasonable accommodations to this particular law. It applies to job application procedure, hiring, advancement, termination, compensation, training, and other conditions of employment. There also have to be reasonable accommodations made for individuals. So wheelchair accessible restrooms, ramps, and such. Okay, that's the ADA, Americans with Disabilities Act. Next up, Federal Personal Responsibility and Work Opportunity Act. And by the way, I didn't really mention, this first chapter is really boring. It's just dry, okay? It will get more interesting, so hang in there. Federal Personal Responsibility and Work Opportunity Reconciliation Act, this was passed in 1996. This act requires employers to report to the state new hires. So when you take a job at an employer, your employer has to tell the state that you have just been hired for this position. The purpose behind this is child support collection. If you are in arrears for child support, or if you have a child support obligation that is supposed to be taken care of through payroll withdrawal, then that informs the state to then send notification to the employer of how much needs to be withheld from paychecks for child support. Okay, so now there's not really all that stiff a fine, $25 for failing to report, but this is, and in Iowa, when you fill out what's called a W-4 form, that also acts as this reporting form to the state, so they get notified. Oops. Immigration Reform and Control Act. This is a form, and if you've ever been employed before, if you've ever filled out an application, started a job, you will have filled out this form. It's called the I-9 form, and it validates eligibility to work in the U.S. So it provides information to employers about citizenship or green card status if you're eligible to hold a position in the U.S. This is what the I-9 does. And we'll look at these again a little bit closer in the next chapter. Many of you, has anybody filled out one of these before? If you've ever been employed at all, you should have filled one of these out. Maybe you don't remember, but you should have filled one of these out. Employers do, though, get in trouble all the time for not having these on file. There will be spot audits by the federal government of employers to make sure that these are on file. So again, it verifies citizenship. Family Medical Leave Act. This provides guarantees 12 weeks of unpaid leave, unpaid, for childbirth, adoption, or serious illness of the employee or the employee's child, spouse, or parent. So it allows an employee to leave their position for up to 12 weeks, and that 12 weeks can be taken in whatever increments that they like. It's 12 weeks within a 12-month period as long as they meet certain requirements. Now it is unpaid leave. There are certain states that are now requiring paid family leave. We do not have that at the federal level, okay? And Iowa does not have that at the state level. So employer has to continue health care coverage as well. However, the employee has to pay for it. So this is one of those benefits that you got to be able to afford it in order to take it, because you're going to be without wages and you're going to be without any assistance on your health care, on your health insurance payments. So even though you've got it, a lot of people really can't take it. Specifics, Uniform Services and Employment and Reemployment Rights Act of 1994. This is the right to military personnel to take a leave of absence from their civilian job in order to serve in an active capacity in the military, and they have a right to return to their job, or at least the equivalent of their position, okay? Unless they were dishonorably discharged. That would be an exception of that. ERISA has to do with retirement income, so it provides some, I'm not going to go into all the details of ERISA. ERISA is a pretty complicated law, but it does provide guarantees with regard to vesting in retirement plans. Vesting means that you have the right to any funds that your employer has contributed on your behalf. So it has a schedule, a vesting schedule associated with it. And the Affordable Care Act. So the ACA, this is one, it's not as new anymore, 2010. This was passed in 2010, and this guaranteed health insurance coverage. When this was first passed, there were a lot more strict provisions associated with it. Employers were required to provide health insurance. Now, and even smaller employers were required to. Now, not so much. And individuals were required to have health insurance. There's no longer a requirement to have health insurance. But the Affordable Care Act covers health insurance. So there's a lot of record keeping that's associated with the Affordable Care Act as well, depending upon whether you're a large employer or a small employer, and it provides like a healthcare exchange as well. It was a huge act. It did a lot of things in the healthcare industry, but it affected employers immensely as well with regard to covering employees with health insurance. Lots of other state laws as well that exist. Workers' compensation laws, which was mentioned in that video. Each state has their own workers' compensation laws. This is not to be confused with unemployment. Workers' compensation pays benefits when an employee is injured or dies or falls ill on the job as a result of their duties or while performing their duties. Workers' compensation insurance is a cost that is borne solely by the employer, and is based upon, it's insurance, so it's based upon their usage of it, and it's based upon the risk associated with the industry. So a CPA firm is going to pay a lot less in workers' compensation insurance than, say, a construction firm would, because the risk of injury is much greater for that construction company. It is covered, there are laws saying that employers have to have it, but it's purchased through private insurers. So they don't buy it actually through the state. And then some states also have some disability benefits laws. Iowa does not. California is probably the most commonly talked about one with regard to disability laws. In some states, employers have to contribute toward disability insurance. In some states, both the employer and the employee have to contribute. I believe in California, both the employer and the employee have to contribute to disability. In Iowa, there's no requirement to have disability insurance. Employers don't have to pay for it. Employees don't have to pay for it. All right, that's a lot of laws to go through. I know, it's dry. And I don't quite know how else to put it. So what I want to do now in our remaining 10 minutes, I want you to spend just a few minutes researching online one of those laws. Just pick one, research it, its history, its, when it was enacted, why it was enacted, maybe who enacted it, what the background is on it. Just pick one, do a little bit of research, and then we'll come back in the last 5 minutes and share what we learned, okay? So let me list them up here. So, I don't know if you can all see it. So these are, so you can see the top here, ones that we looked at, and then down here as well. I know those are all the acronyms because I wasn't going to type that all. just gonna point at my sheet and I'm gonna call on people. Carson,
Well, one of them was city class already, but it was I did the Age Discrimination and Employment Act.
okay?
And I thought it was really interesting that it was 40. Because I've always wondered about like if someone were to do that to someone that was younger.
Yeah.
But I guess that doesn't really apply.
Yeah,
And then it was you have 180 days to file a charge, and then it's private employers with 20 or more employees. So I thought it was kind of interesting that could you have like 10 and
Yeah.
do it?
yeah.
Okay.
Yeah, unless there are some state laws that prohibit it.
Yeah,
Yeah,
okay.
so, yep, there are some that can, thank you. All right, I'm gonna do it again. Carter,
I did the FMLA, and all I got pretty much that wasn't off the things that you had to work 1,200 hours in the past 6 months.
okay, so you have to have worked 1,200 hours, okay, in the past, or is it and at least 6 months?
Or my bad, 12 months. So.
Yeah, okay, and at least 12 months.
Yeah.
Yep, okay. Page 2. Sebastian,
I did the immigration form,
mm-hmm,
but I found it was easy to hire illegal immigrants,
okay,
and that many companies were like away from the agriculture because like they had the immigrants working there.
mm-hmm, yep, yep, agricultural, industry is targeted in a lot of crackdowns on that. All right, Angel. Sorry? You'll pass? Okay. You didn't research it? Okay, so, Leia.
I did URSA, which is the Employee Retirement Fund
Mhm.
and Security Act. I found that it doesn't cover like churches or their employees, which is kind of interesting.
Okay, so doesn't cover churches. I wonder why that would be. Interesting. Thank you. Okay, another one. Whoops, let's stop. Steven.
Yeah, I looked at the ADA and what governs service animals.
Okay.
Because we see a lot
Oh,
of
yeah,
that.
yeah, yeah.
Basically, it's any animal that can be trained to do something that, say, the human can't do. If the dog can do it, then okay. Or if you have PTSD,
Mm-hmm.
the dog can lick you on the hand or something like that
Sure.
to let you know that
Right.
it's time to calm down. and stuff.
Yeah, interesting. But it could be any animal, so it could be an alligator, or I suppose there could be some restrictions on, some safety restrictions, right? Okay, let's do another one. Andon.
I did the withholding laws.
Uh-huh.
Different in each state. Paychecks, not all states have them.
Yeah. All right. Let's do a couple more here. One.
I did the FMLA. I found out that Bill Clinton
Can you say that a little louder?
I found out that Bill Clinton was the one who enacted it.
Bill Clinton. Yep, with the Clinton administration, exactly. So let's do one more. Kylie.
I did the GRIs President Ford.
Can you say that a little bit louder?
President Ford enacted the GRIs.
One more time, I'm sorry.
President Ford enacted the GRIs.
Okay, the ERISA, President Ford. All right, so way back in the 70s, the early 70s. Excellent, thank you, sorry. It's a lot of ambient sound between you and me. All right, well, thank you very much. We will reconvene on Thursday. And we'll continue, we'll talk about the human resources function and the payroll function and how they work together.
I didn't even realize that. I read your thing and I thought it said you were a 17-year-old for a second. And then I went through and reread it.
Yeah.
So.
Yep. Yeah.